Welcome to Money Mastery, the channel where we help you master your money and build wealth for the future. In this video, we're going to be sharing with you some valuable tips on how to invest safely and properly in your 20s. Whether you're new to investing or looking to improve your investment strategy, we've got you covered. From budgeting to diversification, we'll be discussing key concepts to help you make smart investment decisions and grow your wealth over the long term. So, sit back, relax, and let's dive into the world of safe and proper investing in your 20s. Don't forget to like, subscribe, and hit the notification bell to get notified when we post new videos. Let's master our money together. Tip number 1, start with a budget. Before you start investing, it's important to have a solid financial foundation in place. One of the best ways to do this is to create a budget. A budget is a plan for your money, and it helps you track your income and expenses. To create a budget, start by tracking your expenses for a month. This will give you a good idea of where your money is going. Next, make a list of all of your sources of income. Once you have a clear picture of your income and expenses, you can create a budget that works for you. When creating your budget, be sure to include a category for investing. This will help ensure that you're setting aside money for your investments each month. It's important to invest consistently over time, even if it's a small amount each month. Tip number 2, diversify your investments. Diversification is a key principle of investing. It means spreading your investments across different types of assets, such as stocks, bonds, and real estate. This helps reduce the risk of losing money in any one area. When diversifying your investments, it's important to consider your risk tolerance. If you're more risk-averse, you may want to focus on investments that are more stable, such as bonds or mutual funds. If you're comfortable with more risk, you may want to consider investing in individual stocks or real estate. Another way to diversify your investments is to consider investing in different sectors of the economy. For example, you may want to invest in healthcare stocks, technology stocks, or consumer goods stocks. This helps ensure that your investments are not too heavily concentrated in one area. Tip number 3, invest for the long term. Investing is a long-term game. It's important to have a long-term mindset and not expect to get rich overnight. Instead, focus on building a solid portfolio that will grow over time. One of the best ways to invest for the long term is to invest in high-quality companies with strong fundamentals. Look for companies with a history of strong earnings growth, a competitive advantage, and a solid balance sheet. Another way to invest for the long term is to consider investing in index funds or ETF. These are low-cost investments that track a basket of stocks, providing exposure to a broad range of companies. It's also important to remember that investing involves risk. There will be ups and downs in the market, but over the long term, the stock market has historically provided a good return on investment. Tip number 4, stay informed. Staying informed is key to making smart investment decisions. It's important to keep up to date with the latest financial news and trends. One way to stay informed is to read financial news websites, such as Bloomberg or CNBC. These websites provide up-to-date news and analysis on the markets, as well as insights from financial experts. Another way to stay informed is to subscribe to investment newsletters. These newsletters provide regular updates on the markets and investing strategies. It's also important to do your own research before making any investment decisions. Read company reports and financial statements, and analyze the fundamentals of the companies you're interested in investing in. Tip number 5, seek professional advice. If you're not sure where to start, or if you're feeling overwhelmed, consider seeking the advice of a professional financial advisor. A financial advisor can help you create a customized investment plan that's tailored to your individual needs and goals. When choosing a financial advisor, it's important to do your research. Look for an advisor who is qualified and experienced, and who has a good track record of helping clients achieve their financial goals. You may want to consider working with a fee-only financial advisor who doesn't receive commissions for selling specific products or services. This can help ensure that the advice you receive is unbiased. Before working with a financial advisor, be sure to ask about their fees and services. Some advisors charge a flat fee, while others charge a percentage of the assets they manage. Make sure you understand how your advisor will be compensated and what services they will provide. It's also important to have realistic expectations when working with a financial advisor. While they can provide valuable advice and guidance, they can't guarantee returns or predict the future performance of the markets. Remember that investing involves risk, and there are no guarantees. In summary, investing in your 20s can be a smart way to build wealth over the long term. By starting with a budget, diversifying your investments, investing for the long term, Staying informed and seeking professional advice, you can make smart investment decisions that will help you achieve your financial goals. That's it for this video on how to invest safely and properly in your 20s. We hope you found these tips helpful and informative. In our next video, we'll be discussing some of the safest ETFs and stocks that you can consider for your investment portfolio. So, if you want to learn more about how to invest wisely and make your money work for you, be sure to subscribe to our channel and hit the notification bell to get notified when we post new videos. And don't forget to leave us a comment with any questions or feedback you may have. Thanks for watching.